Good morning. Welcome to the War Room. I am Malik. Today is Thursday, March 19th. If you watched the tape yesterday, you saw the screens light up in absolute blinding green. You saw the KSE-100 index violently surge an incredible 4,276 points, completely erasing the week's bleeding to close at 154,292. Right now, retail traders are euphoric. The timelines are flooded with people declaring that the 150,000 floor has been successfully defended. They believe the worst of the macro shock is over and the bull market is back. I am here to tell you that you are looking at a mirage. Yesterday was not a macroeconomic recovery. It was a mechanical, algorithmic short squeeze engineered to trigger FOMO, the fear of missing out. It was a perfectly executed exit liquidity trap. Today, we are going to dissect the anatomy of this 4,200-point phantom rally, and I will show you the exact mystery meetings happening on the board today that prove the corporate sector is still fighting for its life. Let us analyze the pure tape from Wednesday. The index pushed up to an intraday high of 154,684 before settling slightly lower, but I want you to look directly at the volume. The main board traded 397 million shares. While that is slightly higher than Tuesday's absolute ghost town, it is nowhere near the billions of shares required to signal a true organic institutional bottom. So what actually caused a 4,200-point green candle? When a market bleeds out 11,000 points in a week and then suddenly bounces, it is a mathematical reflex. Short sellers who made millions betting against the index had to frantically buy back their positions to lock in profits. That algorithmic buying against an empty order book creates a massive temporary spike in demand. The underlying macroeconomic reality has not changed by a single inch. The 55 rupee fuel hike is still actively vaporizing industrial profit margins. The geopolitical crossfire in the Gulf is still paralyzing global freight. The smart money is fully aware of this. They are intentionally letting the index run up to 154K to draw your retail capital back into the market. They need you to buy so they can finally offload their heavyweights before the Q2 earnings collapse becomes undeniable. The corporate boardrooms tell the real story. Today, Thursday, March 19th, the PSX roster is flashing massive structural warning signs. We are tracking a cluster of critical matters other than financials meetings that completely contradict yesterday's market euphoria. Mark your screens. 09:30 a.m., Sally Textile Mills Limited, holding an early morning mystery meeting in Lahore. Let me be perfectly clear. The textile sector is suffocating under the weight of locked Western borders and exploding energy tariffs. When a textile entity calls a non-financial meeting right at the opening bell, it signals a desperate structural or supply chain pivot. 10 a.m., Pakistan National Shipping Corporation. The state-owned shipping giant is holding an emergency meeting. With the Gulf conflict paralyzing shipping lanes and freight insurance premiums skyrocketing, PNSC's meeting is a massive red flag for the entire national logistics network. 12:15 p.m., Trust Securities and Brokerage Limited, a mystery meeting right in the middle of the trading session in Karachi. As we warned earlier this week, when a brokerage holds an emergency non-financial meeting during historic market whiplash, it heavily points toward margin debt restructuring or severe risk mitigation. Here is your battle plan for Thursday. 1. Do not chase the mirage. The $154,000 level is heavily contested ground. Do not buy into the FOMO from yesterday's green screens. The institutions are waiting at these levels to hand you their depreciating, high-risk bags. 2. Respect the macro chokehold. Until the fuel shock is digested and the freight crisis is resolved, these massive technical bounces are just algorithmic noise. Do not trade the noise. 3. Total cash supremacy. We watch the textile board restructure. We watch the shipping sector try to survive. We sit perfectly still while the algorithms bleed the leveraged traders dry. Protect your capital. Survive the Thursday. Disclaimer. StockSense is an educational platform. I am an analyst, not a financial advisor. The market is facing unprecedented geopolitical volatility. Trade at your own risk.